Welcome back, everybody, to the Garry and Jason show. I'm Garry.
And I'm Jason.
And this is Dialogues and Dialects in Tech, a little show where we talk about what's going on in the startup and entrepreneurship ecosystem in Philadelphia and beyond. But before we jump into some news, Jason, how was your week?
My week was actually pretty good. Got a chance to go down to the beach. We have some nice beaches in the area down in Delaware. So it was nice to soak up some sun, relax a little bit because we're about to gear up and get ready for our beta launch for Katika in October.
Oh, snap.
So a lot of,
October's right around the corner.
Yep. 2 months to go. So,
I appreciate you shouting out Delaware because we don't get that a whole lot.
Listen, I love Delaware.
Yes.
No sales tax. Listen, it's clean for the most part.
It's clean.
Yes.
Now, so you spend a lot of time going between Philadelphia and Delaware.
I do. So my job, my 9 to 5 is actually, even though it's in Pennsylvania, I actually cut through Delaware. So I do spend some time in Delaware.
That's so funny. So, we're in Philly right now. First Founders has an office in Philly.
Yep.
And we also have an office in Delaware.
Okay.
So I spend a lot of time between Philly and Delaware.
Okay.
And I would like to formally invite you to the new colony Philadelphia.
I would humbly and gladly take your invitation.
Welcome. Appreciate you.
Thank you for that.
We got some good stuff to build.
Yeah.
But yeah, man, that's dope. Definitely looking forward to learning a little bit more.
Yeah. What's going on with you? How's your week?
My week was great.
Okay.
I'm excited for the week ahead. It was a busy week last week. I was flying all around the place. I visited Nashville, Tennessee for the first time. I was out there.
I want to hear about that. Yeah,
not on vacation. It was a business trip.
Okay.
And it was because I went out there to meet with the WeFunder team. WeFunder is an equity crowdfunding platform, which I'm sure we'll talk more about.
Yes, I'm going to set that up.
Yes, sir.
Very excited to talk about that.
Yes, sir. It was an exciting time. Nashville is a beautiful place.
Awesome. Well, as Garry alluded to, today's show topic is going to be on crowdfunding, crowdsourcing equity funding. So how I want to set this up is kind of without actually explaining what it is, because I'll leave that to Garry, but just kind of lay out the scenario. So you may be a small business. We're not even saying you have to be in the tech space. You may just be a small business. And you have a group of followers, right? That may be on social media. It may be your friends and family, your local congregation at church, whoever. You have a following for your company, your group. And now you're at a juncture in your business where you want to grow. You kind of maximize everything you can do with the resources that you have on hand. You're saying, hey, I need some capital in order to grow. Now, traditionally, you may go to a bank. Bank may deny you. You may go to something called a VC, which we'll get into. But now there's a new opportunity through a platform called WeFunder that Garry's going to explain how you can bring your community, the people that believe in you and your brand, how they can invest in you and your company, own equity, and help you grow your company. So that's it.
Yeah.
Garry, tell us what WeFunder is.
I mean, first and foremost, though, like the word of the day is equity.
Equity.
That's it. Pay me in equity.
Equity is ownership. It's literally the opposite of debt.
Yes.
So
yes,
you want ownership.
Ownership. That's it. My phrase, my new mantra is equity in all things. Everything that I'm a part of now, I want to have equity in it. Right. And if I have equity in its success, I'm more likely to want it to succeed. Right. And I'm going to put my time and energy into making sure that happens.
Absolutely.
So that being said, a lot of people are familiar with platforms like GoFundMe. Right. When somebody in the community needs some help, or they're launching a business, or their business is facing some hardships or whatever it might be, they set up a GoFundMe and they try to raise some money, right?
We've seen it all.
We've seen all types of stuff on GoFundMe.
Right.
But the premise is anybody can do it, right? Anybody can set up a campaign. They can share it with their community and they can raise the money that they need.
That's it.
Right? So through equity crowdfunding, which is specifically for small businesses and technology startups, as well as creative projects.
Sure.
It's the same concept of GoFundMe, but instead of just donating your money, you have equity in the success of the businesses you want to support.
That's the difference.
It's
not charity. It's not a donation. You have ownership in the company.
Yes, this is what we call using and leveraging capitalism, right? We live in a capitalistic society,
right?
And businesses operate on this. So what's super, super cool is now you don't just have to be a customer, right? You don't just have to be a consumer, right? You can have equity in the same business that you go shop at.
Right. And I know you talk about, the rap icons all the time, like Nas and Jay-Z. Talk about how they've kind of got in early and the benefits of that, and kind of how this is almost the same as getting in early in the game.
Yes. Basically, even before the rap legends got into this stuff, you know what I'm saying? Like, they built their wealth doing a bunch of different things. But we've seen, as you've already mentioned recently, Nas investing in Coinbase, Hove investing in, I believe it's Partake Foods.
Yes.
Just dope companies, dope artists that we've grown up like loving, you know what I'm saying? And now they're investing their money. They have equity in the success of these businesses.
And rapping about it.
They're teaching
you the game.
They're giving you free game. So just listen to the words of the songs, you know what I'm saying? 444. I got a playlist on Tidal called Hovic. You know what I'm saying?
Okay.
Because I'm a bit of a stoic myself.
Right.
I practice stoicism, which is just, daily meditation, mindfulness, all that kind of good stuff. But I have a playlist where it's Hove-ic, right?
Gotcha. Okay.
So I sort of base my life around certain Jay-Z lyrics.
Gotcha.
You know what I'm saying? That help me ground myself and realize that equity and ownership is an important thing.
That's it.
So anyway,
move.
Yes.
Yeah, gotcha.
When we talk about building wealth, there are historically the only people that could invest early in these companies that go on to become worth hundreds of millions, if not billions of dollars, have been people who are already wealthy.
That's it.
So we talk about the rich getting richer, like that is venture capitalism, right?
Yeah. And people that may not know, this is literally prior to 2016, this was the law of the land. Like it wasn't, or I should say, you had to be what's called a qualified investor in order to invest in a early stage company like a Twitter or Facebook or Uber. So it wasn't for your everyday, blue collar, white collar workers. But in 2016, through the Jobs Act, shout out Obama.
Shout out Obeezy.
He passed that legislation, and that opened up the floodgates. So talk a little bit about that legislation, because WeFunder is tied to that.
Absolutely.
And how it operates.
Absolutely. So WeFunder is one of the leading platforms in this space, right? They are the GoFundMe of equity crowdfunding.
Okay.
And the team, the founders of WeFunder, were actually the advocates, with policymakers in DC, right, pushing for this legislation to be passed. And they were actually in the room when President Obama was signing the Jobs Act into law, right, and making sure that regulation crowdfunding, Reg CF, is something that would open the floodgates to allow everyday people, regardless of your socioeconomic status, right? You don't have to be an accredited investor, which is typically just a wealthy individual. You could be anyone, right? And you can invest as little as $100 into private companies and small businesses. So it's a really, really big deal. It has created equity in this space,
yes,
right? Because now this creates an opportunity where individuals can start building a portfolio of companies.
That's it.
They can support the small businesses and technology startups that are coming out of their communities, because we talk a lot about a lack of access to capital in our community, right? The lack of funding that goes to Black founders.
How can we have that even playing field?
How can we level the playing field? We're always saying, well, where are the investors? Where are the investors? But now I can look to my right and be like,
hey,
we got a founder right here. He got a tech startup. He's going to raise some money.
I may know 1,000 people on Facebook that may have $100 that say, hey, I believe in your vision. This looks like a good company. Boom.
You better believe when Katika is raising on WeFunder, I'm going to be running up and down Market Street talking about, y'all need to check this out.
We will be running up and down Market Street.
This is not investment advice, but I highly recommend you check out what this brother is building.
Just check us out.
That's it. So it's literally that. It's a game changer because, again, Black founders are underfunded and over-mentored, right? We know that our communities love us, but typically we don't come from wealthy families. So, founders of Facebook and Twitter maybe could go to their family and their friends and say, hey, I'm launching this tech startup. I need to raise $1 million. Like, can you put in $25K? And they get it easy.
Sure.
Easy, right?
Grandma's got it.
Grandma's got it. My grandma loved me a lot.
Right. Oh, mine did too.
And let me tell you, I got plenty of Christmas cards that had $100 in the Christmas card.
Okay.
Can you imagine if that $100 was invested into my company instead? So anyway, that's what this is, right? Your friends, your family can invest in your business, your startup. You can raise, guess what? Earlier this year, you could raise up to $1 million,
Okay, but now what can you raise up to?
So what happened was companies were out here, right, launching their campaigns. It's this game changer, right? You got people with great ideas, people with existing businesses. They're looking to raise from the community. They want to make sure the community can invest in them. So they put up these campaigns, and you had people raising money, and they hit that $1 million target easy. You know what I'm saying?
Right.
Like the people were waiting. They're like, I can invest now. I can invest in this thing that I've already loved and I've already advocated for. That's dope. So you had companies raising $1 million easy, and then the SEC changed the rules in, I believe, March of this year.
SEC is the Securities and Exchange Commission. That is the federal regulatory body that manages or oversees any stocks investing and things of that nature.
Yes, they do all the boring stuff that makes sure this whole industry is regulated.
Right.
To make sure
trading.
There's no fraud going on, right? There's a highly regulated space, highly regulated industry, right? We want to make sure that people are protected,
exactly,
right? First and foremost. So the SEC is in control of that. And what happened in March was the SEC actually changed the rules. They adjusted the rules, amended the rules to the point where before you could raise up to $1 million as a business, now you can raise up to $5 million.
That's big.
That's big.
That's very big.
And I actually invested in a company back in, I believe it was February.
Okay.
Right? And the cap was 1 million at that point. And then a couple weeks later, the rules changed. And like that campaign, it was funded. It was fully funded, I think, in 24 hours.
I mean, you're talking about literally 5 times the amount that you previously could
5 times. And guess what? They hit the 5 mil.
Oh, without a doubt.
Without a doubt.
Yeah.
It was insane. So that is the power of community, right? These are everyday people, like thousands of people coming together saying, I want to support this. I don't want to just donate my money, right? I want to invest. I believe that this business can provide me with a return on my investment, right? And still, this is a very risky industry, right? We're talking about investing in startups, right?
Which there's always risk,
risky,
associated with any investment.
Always
whether
risky.
You're playing the lottery or investing in a company.
Always.
Buying a stock.
Always. So yeah, the beautiful thing for me is individuals can build their own investment thesis, right? Like you get to start figuring out for yourself, you know what do I care about, right? What do I want to invest in personally? And you start building your own portfolio, just like you would with stocks and bonds and all that kind of stuff. Now you can have some startups and small businesses in your portfolio. If you've got a high risk appetite, right? You might be invested in some crazy stuff, or you might be a little bit more conservative, and you might want to invest in the local, coffee shop or the local brewery, right? Yeah. There might be 2 brothers who are local. You know what I'm saying?
2 local brewery
making some beer, and you say, "Look, I like this beer. I like these brothers. I want to invest."
You know what they're doing?
They know what they're doing. So you make it happen, and you can do that. So that's the power of equity crowdfunding. Any business, any small business, any tech startup is eligible, right? You should definitely check it out. There's a lot of different platforms you can raise on. I am now a city partner with WeFunder. So I'm partnering with WeFunder to really galvanize the greater Philadelphia and Delaware communities around, supporting our dope founders that we already have here.
So literally, I mean, I don't know that he just said it so nonchalantly, but that's a big deal. That means that WeFunder is here in the city of Philadelphia, and he is literally an ambassador for, or I should say, joint venture partner. Yes.
I got equity.
Partnership.
I got equity.
So that's
it. Equity in all things. Yeah, man. I'm excited because we've been doing this work of just like building the community, galvanizing the community. A lot of times we're told like investors will say, we want to invest in Black and brown founders, but we can't find them.
And we know that's just,
you know what I'm saying?
We're out here.
Philadelphia demographics. What do you
there's probably, I can, we're here.
We're here. We're right here.
We are definitely
And
here.
our community knows we're here. So now that the community is empowered to be our investors, it's a wrap.
It's a wrap.
It's a wrap. So I'm excited. Definitely going to be sharing a lot more about equity crowdfunding. Like always going to be talking about the opportunities. I put this tweet out yesterday that's going somewhat, I'm going to call it viral for me.
It went viral.
It got more than 3 retweets. So that went viral for me. But yeah, man, I just put it out there. I was like, would anybody be interested in joining a community of investors? Whether you're an aspiring investor, an existing angel investor, or even a current venture capitalist, joining a community of other people who are, working to support founders raising equity crowdfunding rounds. Right. And the thing went crazy to the point where I had to set up like a form to collect all their emails and contact information.
That is beautiful.
Founders are sending me their decks. Investors are saying, hey, would you be interested in coming speaking to our angel group?
That's amazing.
So it's like, man, the energy is there. It's the community. Community is the answer.
Started with a tweet and a question.
Yeah.
And you see how it's going through its steps, and it's eventually going to take form into something beautiful. But
yes.
That's almost like doing like an MVP or a problem hypothesis. Like, hey, this is what I'm thinking about, put it out there, boom, got responses. Now he's organizing that, he's going to follow up on that.
Yeah,
beautiful thing. But I want to get back to why I personally love this mechanism to be able to invest. A lot of times, let me take a step back. During the pandemic, a lot of people really had the time to look at our economy, and they realized, hey, investing in the stock market is a great way to grow my wealth, right? If you look at our historical recessions, the people in the industries that always bounce back are banking and investment, Wall Street. And so this recognition of, I would say, the collective society were like, hey, we want to get in the game. So around this time, Robinhood is a platform that made that easy for a lot of people to start investing. They gamified the way in which people buy stocks. And during that period of time, you had a lot of companies like Airbnb, recently Duolingo, had what's called an IPO, initial public offering. And so what that meant was they were once private companies, and now they're publicly traded companies that once they're publicly traded, now you have the opportunity to buy stock in them, and you own equity in the publicly traded company version of that. What crowdfunding does is this lets you get into the game before they get to that IPO, whether that's a direct listing or IPO. And let me really quick to break that down. When you're a small company, let's just say I'm Katika, right? Hypothetically. I start with a funding round of what's called a pre-seed stage. I'm still a private company, which means that only qualified investors or crowdfunding investors can invest in my company. Now, when you invest in me, you're going to end up on something called a cap table or capitalization table. This is basically a form that says where all your investors are when you're in at your company, what they invested in, at which point, their interest rate, the pre-money, post-money valuation. We'll make a whole episode to talk more about that. But
sounds good.
The point being is that it's a private company, and at each step of the growth of Katika, so I'll start off with a pre-seed, then I'll move to something called Series A, then Series B, Series C, and then by the time I get to Series D, this is probably, people are like, hey, you're worth $1 billion. Your monthly recurring revenue was $100 million. I'll be on my way to going public. At that point, that's when everybody who got in early, that pre-seed, that crowdfunding, that early stage, when you got on that cap table, that's where you benefit and you become an overnight millionaire and all that. So crowdfunding, again, allows you to get in early while the company's still private at the very micro stages of it before it grows into that unicorn, that's that $1 billion company that has that IPO. So when you see someone like a Nas or Ashton Kutcher, something like that, Kutcher. These are like celebrities who have like learned, even some ball players like D Wade, KB. These folks are recognized like, hey, I've got this money sitting in the bank. Let me go ahead and just slide it in a couple of these tech startups.
Yep.
And even if not all of them hit, if one hits and it goes to $1 billion and it goes IPO, I've like made 10 times my money. So.
Because that's more realistic.
That's more realistic.
You know what I'm saying? Because you gotta diversify your portfolio for one.
Absolutely.
You gotta spread your bets across. You're gonna invest in a lot of different things.
Just like you do with stocks. You wouldn't put it all in one industry. You would spread it across. You might have real estate in your portfolio. You might have precious metals. Invest in gold. Yep. Now you have the opportunity to invest in small companies that have the opportunity to grow into large companies.
If you had invested in Facebook, right, while it was private, I'm sure you'd be very happy right now.
Right.
After seeing its growth.
Oh my gosh.
You know what I'm saying? Like there's a book called Angel by an angel investor, Jason Calacanis.
Yeah.
He invested $25,000 into Uber when Uber was just, the black cars. You know what I'm saying? Like driving around like one or two cities.
Yep.
You know what I'm saying? He's made his portfolio is worth over $100 million at this point.
And that's a great story. But I'm also tell you too, there are a lot of companies that we know today that the idea that they ended up with, that we know them as, is not the original idea that they started out as. Uber didn't start out as a ride-sharing company. Like, they changed their business model. Airbnb did not start out as
about
rentals.
Obama.
Yeah.
You know what I'm saying?
Listen.
Obama O's. Was that what they were called? And Captain McCain?
Yeah.
They were selling cereal.
They were literally selling cereal. Like, there's a lot of amazing stories, and you're like, we know these brands today, but they did not start out like that. So be along for the ride, do your research, as you're investing in these companies, do your due diligence. But we are out here. Micro companies that need capital, that need to scale.
Yes. So just be ready. When the day comes when Katika is raising a Reg CF equity crowdfunding round, just be ready. That's all I'm going to say. Be ready, because we're going to need your help to spread the word. You shouted out, some ballers and athletes.
Yes.
So I got to shout out D Wade.
Yep.
Because
D Wade as well.
As the founder and executive director of First Founders Inc.
Right.
You know what I'm saying? A nonprofit on a mission to build a more equitable and inclusive ecosystem.
Preach.
We had our third cohort of our accelerator program earlier this year. At the end of last year, we had a pitch competition this year to cap it off. Right.
Yeah.
The winner of that was a company called Kitty Credit, a financial literacy platform teaching kids how to build credit through doing chores.
Love it.
Dope founder based in Miami. Right? All I gotta say is D Wade is on his cap table.
Enough said.
Yes, so when you see Kitty Credit raising the Reg CF round, I'm gonna need y'all to spread the word too.
Right. And that's, so think about that, and we're gonna wrap it up here. But think about that. You have, we didn't talk about this, but you have something called a lead investor. D Wade.
Yes.
Now, you better be sure D Wade's not just going to throw his money into any company. He's going to have a whole team of people, go through that company, make sure they're legit, make sure that this is something worthwhile. But people seeing the fact that D Wade invested in that company, other people will be attracted to invest in Kitty Credit, which means that your dollars almost have a guarantee of having somewhat of a return, for investing. So look out for Kitty Credit.
That's it. Be multifaceted. Yep. You can be a baller. Be a baller. Also be an investor. If you want to be a rapper, be a rapper. Also be an investor.
Balance.
Invest like Nas. Invest like Hove. Create like Tyler. Scale like Riri.
Yeah.
You know what I'm saying? Like be a black unicorn.
I think we have some merch coming out.
Wow. New merch coming. It's on the way.
All right, guys. Well, we're going to leave it there. It's been another episode of the Garry and Jason Show. We are very excited. Listen, we're back. We had to take a little break. Garry had some stuff to do for school. I had some stuff to do for work, but we are back. We have a lot more to share, so stay tuned. Check out the website. Thank you. Have a good one.
Peace.